What if I told you that the single best thing you could do for your finances right now is absolutely nothing? Not researching stocks, not downloading another budgeting app, not watching crypto charts at midnight. Just nothing. Because here is the uncomfortable truth most financial content will never tell you. The money you are constantly chasing, flipping, and stressing over is actually underperforming the money that is sitting quietly, growing in the background. So today, we are answering one question that could completely change how you think about building wealth. What happens when you stop trying so hard with your money and actually let it work for you? Let me paint you a picture of what most people are actually doing with their money right now. There are three types. The first group has money sitting in a regular checking account, barely earning anything, while inflation quietly eats away at its value every single month. They call it saving. It is not saving. It is slow financial erosion. The second group is the opposite extreme. They are constantly moving money around, reacting to every market dip, chasing every trending opportunity they see on social media. At the end of the year, after all the fees, all the stress, all the sleepless nights, they have usually made less than they would have by doing nothing. And then there is the third group, the avoiders. They know they should be investing, but it feels complicated and overwhelming, so they keep postponing it. Next month, after the raise, when things settle down. Meanwhile, years slip by, and the most powerful force in all of personal finance, time, is being completely wasted. Here is what all three groups have in common. Their money never gets the chance to do what it is actually designed to do. And what it is designed to do might surprise you. So what does it actually mean to let your money work for you? The concept is simpler than the financial industry wants you to believe. Start with a proper emergency fund. 3 to 6 months of expenses parked in a high-yield savings account, not a standard checking account. High-yield accounts can pay around 4 to 5% annually. That money is not just sitting there doing nothing. It is your financial safety net earning real returns while protecting you from life's unexpected moments. Next comes index funds. These are not exciting. Nobody is making viral content about them. But here is the thing. The most boring investment strategy available has consistently outperformed the majority of professional fund managers over long periods of time. You spread your money across hundreds of companies automatically, add to it regularly through dollar-cost averaging, and then you step back. Then there is dividend investing, where companies pay you a portion of their profits regularly, and you reinvest those payments to buy more shares, which then pay more dividends. It compounds quietly, like a snowball that nobody notices until it becomes an avalanche. Bonds bring stability when everything else gets volatile. Retirement accounts like a 401k or Roth IRA give your money a tax-protected environment to grow in, shielding your gains from being eaten by taxes over decades. Real estate, whether physical property or REITs, lets your money rest inside an asset that can appreciate while generating income simultaneously. The common thread connecting every single one of these approaches is the same. You build the system and then you get out of the way. But if this is so effective, why does almost nobody actually do it? The reason most people cannot leave their money alone comes down to psychology. Our culture has programmed us to equate action with progress. If you are not doing something, you must be falling behind. Social media amplifies this constantly, showing highlight reels of trading wins, overnight gains, and instant wealth. What you never see are the quiet losses, the people who bought at the peak and panicked at the bottom, the ones who chased someone else's success story straight into a financial hole. Studies consistently show that passive investors who build a strategy and leave it alone outperform active traders over the long run, not because they are smarter, but because they are not undermining themselves with emotional decisions. Then there is the trap of feeling like it is already too late, or that you do not have enough money to start. Neither of those things is true. The best investors are not the ones with the most money or the most knowledge. They are the ones with the most patience. So here is how you actually build this. 4 steps, and none of them are complicated. Step 1. Automate it. Set up transfers that move money into your investment accounts the moment your paycheck arrives. Before you spend a single dollar. before you even see it. Pay yourself first, every single time, without having to make a decision about it. Step 2. Protect it. Keep your investments in separate accounts from your everyday spending money. Give yourself a 48-hour cooling-off period before making any unplanned financial move. That urgency you feel in the moment almost always fades, and so does the impulse decision you were about to regret. Step 3. Personalize it. Not every strategy suits every person. Someone younger with high risk tolerance should approach things differently than someone 5 years from retirement. Explore what aligns with your timeline, your goals, and your comfort level. There is no universal answer, but there is always a right starting point for where you currently are. Step 4, and this is probably the hardest one, release the guilt. Stop feeling like you are failing because you are not actively managing every dollar every day. The financial media profits from your anxiety. The platforms profit from your trading volume. Real wealth is built by those who set a thoughtful strategy and resist the noise long enough to let compounding do its job. Here is the bottom line. You would not run your body into the ground without sleep and wonder why it is breaking down. You would not expect a garden to grow if you kept digging up the soil every other day. Your money operates the same way. It needs the right environment, a clear structure, some time, and the discipline to leave it alone. Stop exhausting your money with constant activity and start giving it a place to genuinely grow. The results will not arrive overnight. But one day, you will check in and realize your money has been quietly building something significant while you were busy living your life. That is not luck. That is the strategy almost nobody talks about. If this shifted your perspective on wealth building, hit the like button and subscribe so you never miss content that actually moves the needle. See you in the next one.